The last few years hasn't been easy for landlords in the UK, with increased regulations, rising operation costs, but also those escalating mortgage rates have been tough. Now, today we're going to be diving into rental yields and whether this is going to be a turning point for those investors looking to grow their portfolio. And if you're looking to grow your portfolio this year, make sure you stay to the end because I'm going to share with you the top areas when it comes to rental yields across the UK. Rental yields are at its highest since 2014. According to Paragon's latest Trends Report, landlords are generating around about 6.3% this year alone when we look at the second quarter. Now, again, this is the highest that we've seen in around about a decade. In fact, yields haven't been this strong since Q3 of 2012 when they hit 6.7%. Now, this is a huge recovery since last year when we saw yields hit a 15-year low of 5.2%. Our landlords finally seeing a bounce back when it comes to yields and a better luck when it comes to investing in long term. So Richard Roundtree from Paragon Bank said it best. Rental yields are a key measure of the health of a letting business, and it's fantastic to see yields hit a 10-year high. And clearly things are looking up for landlords and investors. And of course, yields is not the only thing you should be chasing for as a property investor, because capital growth is where you're always going to win. So if you haven't already, make sure you subscribe to this channel because we're going to be following up with a great video on capital growth across the UK. And the data gets even more interesting as we dive in and dissect it by portfolio landlords. In fact, those landlords who have 11 units or more are reporting average yields of 6.9%. And get this, those other investors who have properties in a limited company are reporting even higher than the 6.9. Meanwhile, those with houses in multiple occupancies are reaping the rewards of up to 7.2%. So it's clear that those who are diversifying their portfolio are getting better returns. And that makes me think about the short-term rental sector, which this report doesn't dive into, but I'm very curious as to how that will play out, especially when we know that short-term rentals really do maximize your returns. And I'm just curious, if you're a landlord, leave me a comment below. What's your experience been in the last year when it comes to yields? Switching gears to another major trend is growing tenant demand is pushing landlords to expand their portfolios. Now, in a survey conducted by Paragon Bank, 500 landlords were asking about their plans in the future, and the results are clear. Landlords, or at least those professional landlords, are more ambitious than ever. Check this out. 60% of landlords said that the ongoing demand from tenants in the rental sector is a key reason they're looking to grow their portfolio. And in fact, over 50% of landlords said that they're looking to add to their property portfolio as a means to boost their retirement income. And get this, 47% of them are betting on the market for long-term house price growth. And this is going to guide their investment decisions over the years to come. And here is another interesting figure. 34% of landlords said that they preferred property investment to any other form of investment. And this is not only because of the rental yield, but also because of its tangible nature. They could pass it on as inheritance. And I've always said it's very rare to see another investment that could give you these three buckets. Number one, capital growth, which is where you win. Cash flow from rent, but also someone else paying your debt. So clearly, professional landlords see property investment as a long-term strategy to build wealth. For smaller landlords, those with up to 3 properties, their desire to grow their portfolio is surprisingly still strong. I'll say surprisingly, because of course, those are the ones that have the most concerns when it comes to taxes and those changing regulations. But they are still looking to maximize on their rental income and see property as a long-term wealth building. If you're finding this video helpful, make sure you smash that like button. It really motivates me in shooting more of these videos for you. Some landlords are selling up, but there certainly isn't a mass exodus. While Rightmove does report that it's been a record of 18% sales of properties that were once rental property, and this is an 8% increase from 2010. But this is mainly influenced, of course, those smaller landlords' concerns with regulations and taxes. Despite this, experts like Tim Bannister from Rightmove says not a mass exodus, though there are concerns about long-term effects on tenants if landlords keep selling. London is leading the trend with nearly 29% for sale homes previously rented. Experts urge the government to keep landlords inside the rental market for the benefit of all. And yet, while there are some buy-to-let investors leaving, buy-to-let continues to be a sound long-term investment. So the previous 5-year average of rental properties moving into the sale market across Britain is 14%. So 18% now isn't a huge indication that there is a mass exodus from buy-to-let investors. Now, let's take a closer look where landlords are getting the best possible yields across the UK, according to a report from Zoopla a few months ago. Topping the list is the North East, where landlords are enjoying average yields around about 7.6%. Now, of course, this is thanks to the low house prices in this region, but also the strong demand. Now, if you've been following my channel, you know that there's this big divide between the South and the North, both when it comes to house prices, but also demand. And further up north, Scotland follows closely behind with a 7.4% yield. And yet, if you are a landlord, you probably have to be quite brave to either continue to grow your portfolio up in Scotland or even enter the market. Of course, we know that Scotland particularly have not been very landlord friendly. And then you've got regions like the North West, Wales and Yorkshire and the Humber also report high yields ranging from 6.3% up to 6.6%. Meanwhile, down southeast in London has the lowest yield, hitting around about 4.9%. And of course, this is because of the high property prices. But as we do know, those of you who do invest in the capital, is that where you're going to win is in capital growth, which it never fails. You may have to wait a bit, but it always delivers. Looking to invest in a specific area? Let's break this down even further into local authorities in the regions that are providing the highest yield. The County of Durham leads the way with a whopping 7.8% gross rental yield, followed by Gateshead with 7.7%. Followed with that is going to be Scotland. Renfrewshire offers an impressive 9.5%, with East Asia not far behind at 9.5%. Burnley tops the chart with 8.4% gross yield, and Wales, of course, 7.8%, the highest in the region. And across the UK, areas like Stoke-on-Trent, Nottingham, Plymouth, but also Southampton are seeing strong yields too. So if you're looking to invest in property over the course of the next year, make sure you subscribe to this channel where we'll keep you up to date.